Okay, everybody. While we're wandering in, let's see, I need to open the chat window. If somebody could tell me if they can hear in the chat, I would appreciate it. For a couple of you. Okay, yes, can hear well. Cool. All right. I am getting a new headset that will be much better sound. At the moment, we're still on my webcam mic, but as long as you guys can hear, cool. All right, can you see the slide? Is that what your screen is showing? The first slide with Orderflow Setup Workshop introductories? Yes. Okay, cool. Then we are good to go. All right, welcome everybody. Couple of quick things. This session is gonna kind of repeat tomorrow. I will be doing it live again. It might be slightly different. You're welcome to come to both. Some of it will be duplicated, but I get asked that one a lot. Yes, this is being recorded. Everything will be recorded and posted in the group. Other bit of administrivia. Please go in the Slack and read, everybody. I'm getting a lot of the same questions over and over again, like, will the sessions be recorded or whatever. I've organized the channels to try to answer general questions. For example, if you need the calendar of what is coming up, it's called Workshop Calendar in Slack, and the links to all of the different sessions are there. Also, please, I'm not protecting any of this material in any way. I'll probably throw some watermarks on charts if I have time, but I'm just kind of trusting everybody to use this for your own purposes, and please don't distribute it all over the interwebs. Do I need our trading platform opened? Okay, cool. That's one of the questions I keep getting, and I want to answer that one too. No, today you don't. And this is not going to be about trading platforms. This is one of the things we're going to talk about today. Yes, you'll see mine, and yes, I'll show you examples of how mine works. But this workshop is about how to read price action anywhere, any good platform. The key point here, and you'll hear me say this over and over again, but you get burned the opposite into your head by listening to the nonsense on the internet. A good trader can use any good toolbox and trade well. Just like a good carpenter can take any good set of carpentry tools and do his thing. Don't get married to your platform. That's a really big mistake to make. Don't get married to your indicators if you use them or tools. Learn what you're trying to see with those things, and that's how you kind of get to the point where you don't need the tools anymore and you just kind of see it. We'll talk more about that, but this is a key point. So try to remember that. When we do need to see platforms and whatnot, I will show you them here. And what I encourage you to do is to follow on whatever you've got. I mean, if you've got Thinkorswim, the charts suck, the data sucks. I wouldn't trade futures there, but there's a couple of things it does well. And if that's what you've got, you can follow there. You won't see everything that I'm seeing on my platform, but it will still be appropriate. Okay, let's see. I think that covered all that stuff. Let's move on. And that's not going to help. Okay, give me a second here. My mice are not cooperating. There we go. No, that's okay. Yeah. All right, cool. We're on the right one. All right, you guys should have my contact information. I just throw this up again because sort of intellectual property, and also just quick guidelines. Some of you heard this before, but to communicate with me, the best thing to do with anything that is not just a yes or no, or I can't get in or whatever, use email, please, because then we can thread it and the conversation can continue. If you need to just get a quick answer from me, I'm always on Facebook Messenger chat. I'm usually on Twitter as well. Those are the addresses for that if you don't already have them. I encourage you to follow there because there will be material that doesn't always make it everywhere else. Okay, the standard disclaimer, this is educational material. Don't interpret it as anything else. What you do with it and whether you make money with it or not, all that stuff's up to you. You know, we are in a classroom. Please keep that in mind. Even when we're watching live trading and money being made and lost, it is a classroom. Okay, the agenda for this particular session will be as follows. Keep getting this question, which is kind of what our workshop's about. What's order flow? Really simple answer. It's just price and volume action. You know, you'll hear all kinds of Twitter gurus telling you that it's this or that. It's the delta or the cumulative delta or the delta bars, or it's, you know, the linear regression of the moving average of the delta bars cumulatively over the last 60 minutes. All that crap is nonsense, guys. There's no definition. Order flow is simply the tape. And what that means is who's buying and selling, how much volume are they buying and selling in, and are they pushing the price one way or the other in the process of doing it. That is order flow. That's what we mean when we use the term. It'll pop up a lot of ways, but that's the bottom line. Is the price moving, and is it moving one way or the other? And if so, how much volume? And is somebody in control? And that's something we'll come back to. Okay, why do we care about order flow? This is really, really important. We care because market structure has gotten more and more auction-like. Therefore, unless you understand that auction behavior and how it influences price and the games that algorithms and HFTs and big traders can play with those ebbs and flows of price and ticks and volume, if you don't understand that, everything else you're doing will not work, okay? That's a really bold statement. I'll say it one more time. I don't care what your methodology is. If you're not considering order flow in it, you will fail over the long run. And like everything I say on these sessions, that's my opinion, but I challenge anyone who hears it to prove me wrong. And you know, if you show, I've got a trending indicator that made $50,000 last year and it was automated, great. That's one setup. You traded with one strategy that was automated. That can be done. But the second the market conditions shift, that will stop working. And that's why you have to always consider what's going on under the covers. A lot of ways to do that. Most of them fall somewhere into the description of the term order flow, but we're going to be more specific as we move forward. But I just want to make sure that you guys understand, I don't have any like textbook definition for you. It's really simple. It's just the flow of the money. And once you get that sense in your head and you get out the sense that there are support levels or resistance levels that actually matter, because they don't, not anymore. And I'll come back to that too. That doesn't mean they're not influential. It just means that they no longer are what you think they are. They are not support, they are not resistance, they are inflection points. They are potential areas of interest for big volume, hence order flow, to become important. Okay. Oh, by the way, some of you haven't been in a session before with me. These are very informal. I'm watching the chat. So if you have any questions, please type them. If I can answer it on the fly, I will. If I can't, we'll have plenty of time at the end for Q&A. So I can read and talk at the same time. So if something I'm saying isn't making sense to you, put it away, I don't get that, or you know, can you elaborate on that last thing or whatever? Just put that in the chat. Okay. Let's see, I gotta get back on the right screen for my mouse to work. Okay, how will we learn to see it in the workshop, it being order flow? And this is a question I've gotten a lot, and this comes a lot with the question, do I need to get NinjaTrader and Jigsaw like you have to learn? And the answer is no. I'm gonna try to show it a bunch of different ways, but one of the things that helped me learn order flow, and I've been showing you guys in the group, and the response has been fairly positive, is linear regression channels. You've seen LRCs. We'll talk a lot about that. It's just a way that I kind of worked out to learn what order flow is really trying to teach me. And then once I kind of had the hang of it, I stopped using it. That was like a year and a half ago, 2 years ago. But whenever I show it to someone else, I find they get it much faster when I do that. So I put it back on all my charts, and as long as we're doing the workshop, I will continue to show you the channels. But again, guys, don't marry the indicator. Linear regression is a statistic. Thank you, Lee. I love the way you put that, Lee Harris. These indicators produce a number. The linear regression channel very simply just looks back and says, of all these prices and trades that went by, what range encapsulates them the best? And that's a real good thing to know on little different chunks of time. So, okay, I see a question. If one side is buying, the other side is taking, the order's getting short. Okay, there's that, let's see, is it Maria? Sorry, my font's really small on the chat, but I can see the question, it's a little bigger. The answer, that's a really common confusion for new people to order flow. if somebody's buying and somebody's selling, well, then, there's a buyer for every seller. Yeah, that's true, but that's not what we're talking about. Remember, we're in the framework of an auction. So if you think about it, just take the market out of it for a second and say, you're buying a painting at an auction and somebody says, do I hear bid $1? And yeah, I offer $1. And someone else says, I'll give you $1.25. Do I hear $1.50? That's what we're talking about. And it's the aggression with that movement. So I go to auctions frequently like the type I just described with Art. A friend of mine's a collector, and it'll be going along like, oh, it opens at 500. Do I hear 500? Yes, I have 600. It'll go around like that. Then all of a sudden, there'll be some guy on the phone, and I have an order on the phone for 2,000, and everyone else it ends right there. Or someone comes over that bid. That's an example of how order flow can affect the price. So it's not the buying and selling you're looking at, it's the volume of the buying and selling. And so you have to, in order to be able to do that, you have to look at trades at the bid and trades at the ask. And you have to have tools to be able to do that. So that's where you might need a jigsaw. You cannot see that on a regular tape like in Thinkorswim. The side it shows you it on is meaningless. They aggregate data, and you actually have to look at it backwards to get it right. You have to look at trades at the ask as being moving up and trades at the bid as being moving down. And that's actually the ticks work the other way around. So that can be really confusing. Okay, I see another question. Aggression with that movement. That's a light bulb. Good. See, that's what we're looking for. The whole purpose of this workshop is to get people to have epiphanies. Light bulbs go off. So thank you, Steve. We're accomplishing our mission. The TST application, are you talking about TS Trader? If you go and look in the TST group, I posted about that forever. I tried to implement that last year for almost 7 months. And I know the people at Tradeovate, and I worked on the database. And the net result, if you're using any kind of aggressive trading, it's just not ready for prime time. I wanted to do it because the commissions are so low, and I went back and forth with Top Step on it a lot. Because they're kind of at the mercy of Tradeovate, there's a lot of issues there. But would I recommend using it? No, not under any circumstances. It may work fine, for 3 weeks, and then you'll have a catastrophic error. And you just can't have that in trading. You need a stable platform. Okay, so let's move back to the agenda for just a second and move on to the next item. This is really important too, guys. Seeing order flow takes seed time. If you can't commit to that right now, do yourself a favor and find another business besides trading. Because and I get a lot of interesting responses when I bring this up. So here's one example of this. Well, I've been trading for 4 years, and I've been looking at order flow for 6 months, and I just don't get it. Okay. Well, I've been trading for 46 years, and I've been doing order flow for 6 years, and I still sometimes don't get it. So what the point I'm making here is this is a profession, and it's really hard. Look at that "Welcome to the hardest game in the world" thing I have posted everywhere. That's true. You're up against the best of the best with the best money and the best computers and the best PhDs writing code. So if you think you're going to come in here and be profitable with a $10,000 account in 6 months, you're not. So it's really important to have a reasonable idea of what's reasonable and what isn't. So let's throw some numbers at this. In my experience, people don't have a clue what anyone is talking about with order flow for 3 to 6 months of watching videos and watching charts and watching people with domes. And then one day you get something like what Steve said just there, a light bulb goes off and you're like, oh, wow, okay, I get it. So that's what you got to strive for, folks. It's getting yourself past the mental blocks. And one of them is that technical analysis. That's going to kill you if you get stuck there. I'm going to come back to that. Whoops, sorry. Got my finger sitting on my mouse. Okay, so it's still real important to find your niche. And I'm not saying you should all be scalpers on the dome or what have you. I'm just saying that you need to understand that everything you might already know, particularly in technical analysis, will mislead you. So you have to kind of think about your personality, and you have to kind of look at what we're going to talk about in the workshop, and try to understand where you fit in that. And hopefully I can help each of you do that. That's one of my objectives here. Okay. Introduction to setups. We're going to go through that today. And then the last thing we're going to do is talk a little bit more about the structure of the workshop. Okay, any questions on any of this before I move on? Let's see, I answered that one, All right, I will continue and watch that for further questions. Okay, if you don't understand this statement, I have a whole bunch of books I can send you. I have a whole bunch of videos I can send you, but you need to understand this and use in your head the example with the art auction. That is exactly how they work, particularly in futures, because in futures there are no market makers, although people throw that term around. How long is this session today? That's a great question. I'm going to try to make it between 30 and 45 minutes. Where are we now? Let's see. We're on about 17 minutes. Okay. Yeah, we'll get through it in about then. It might run a little long with questions. It will be recorded, and you could ask me a question tomorrow from something I said today. That's fine too. That's why I'm doing this at two different times, 2 introductions. Okay, anyway, back to this. Markets are auctions, particularly in the futures market. Because every dollar, TST is Top Step Trader, yes. Every dollar that is won is lost in the futures market. Every buyer has a seller on the other side. In stocks, that's not always true. There are people in the middle that are market makers, and they will accumulate and distribute and do all kinds of things that affect stock prices. Futures markets are not like that. Yes, there are big players that act as market makers for off-site traders, but they have the same rules in the game we do. Everybody sees everybody's orders, everybody sees everybody's trades. So real important to understand that. Price moves because somebody is aggressively buying or selling, or it doesn't move. Okay, why something happens is irrelevant. Let's see, is Jeremy in this group? I can't remember if he signed up. I don't think he did. I see all the time people, hey, what was that? Why did that happen? When there's a big move in price. And I can't tell you regularly enough, who cares? Ignore it. Why it happens doesn't matter. And it used to be 2-3 years ago, you could, have a news feed and you could kind of game the news as something hit, or you could see the reaction. You're kidding yourself if you think you can do that now. And people that are paying for, special news feeds, $50 a month or whatever, I think you guys are nuts too, because the bots and the algorithms have that stuff and have already priced it way before it hits any of those. So all you can do is watch how something gets priced in, and then, an hour later, go back and read the news and, oh, that's what that was. I truly encourage you to look at it that way. If you try to think, you'll get screwed. You're not smart enough. You can't think fast enough. You don't have enough RAM in your head, and you're talking to a guy who thinks he's the smartest guy in the world since he was a kid. So, I say that only half in jest. I hope I make my point there. Why is irrelevant, and you are not smarter than everybody, and you can't think or outthink it better than anyone else out there. The odds are there's 1,000 of them out there doing it better than you, if not 100,000 or a million. Trade what you see. Yes, that is absolutely the right thing, but learning how to do that's really hard. I hope I'm pronouncing it Kawika properly. Absolutely. Learning how to trade what you see and learning not to think is really hard. And that's one of my objectives in the workshop, is to get you guys there. The market doesn't care about your opinion. Neither do I. Neither do the other people in the group. I think we're going to hit 30-30 in the S&P. Don't think that way. If it's got momentum and you're at 30-25, then 30-30 might happen. But if you get to 30-28 and your momentum goes away, then you better get out. Stop thinking about 30-30. That's the problem with thinking about price levels and support and resistance. Again, you're going to hear me over and over tell you those things are nonsense. They are nonsense in this day and age. That doesn't mean they're not useful, but you can't think of them in those old school, as in 5 years ago, absolute terms. Okay, Kavika. Oh, cool. All right, so it's like a V. Thank you for that. I pride myself on trying to get everyone's name correct. What about players holding the market and those who take the other side? Again, is it Maraja or Maria? I'm guessing it's Maria. Cool. All right. There isn't anyone taking the other side. Again, I hear a lot of these things, and I know they're coming from educators out on the webs and giving out information that's just either it's really old or it's just not detailed enough to be accurate. So there are no players holding the market. In the futures market, what can happen is, let's say we get to a price, 30-28 example. And yeah, forget the orders that you see sitting there. Unless somebody has actually bought or sold, I don't believe what they're saying they're going to do. I'm more interested in what's happening. So let's say we get to 30.28, and no matter every single tick we go up, somebody just slams it down with a fill, 100, 250, whatever it takes to push it back down. If you're seeing that, it's not that someone's holding the market or taking the other side. It's simply that there's a big player selling there. Now, the only thing you should do from that is what I just said. Oh, wow, there's a big player selling there. That doesn't mean he won't get absorbed and will continue to go up. It doesn't mean that other people won't join him. It doesn't mean that he couldn't be an algorithm and he's going to push us down 2 ticks and then buy the other side of it. You don't know any of that. So to sit there and say, well, there's someone holding the other side or holding the market, you're implying that they have some power over the market that they don't. And they don't know any more than you do. Bigger players just have the ability to throw their weight around a little bit more. Okay, the only thing that matters here, and I'm going to try to stick to the agenda just so we don't go too badly over on time, 22, okay. So the only thing that matters here, and this is the order flow definition we're going to use in the group and in the workshop, is price and volume action. That's it. And I just gave you a bunch of different examples of what that means, like my example of 30.28 or example of somebody pushing the bid down or pushing the ask up. Okay, let's see. Sorry, I keep trying to move my mouse from one end to the other and I don't do it quick enough. Okay, let's see these questions here. What about, so how do you handle that? Okay, again, Maria, you're trying to think ahead, and we'll talk more, you and I, one-on-one, but you don't predict who's going to win the battle. You go with whoever is winning at the moment. I hope that answered that question. Retail traders, us, do not move. Is this a question, John? TPI, please don't just spout terms when we're doing a conversation like this that we're not talking about. You know, if we want to talk about TPO charts and things like that, I'd be happy to do it, but that's not our topic now. If there's a question there, please restate it. Yeah, you know, one of the things that the educational material out there kind of misleads you with is that technical analysis matters and that support and resistance matter, and these things are all like very, very like 1985 to 2008 or so. And then the market information got to the point where you could game that stuff. So, you know, there'd be a quote unquote pivot point and the HFTs would just say, okay, we'll get down there and let all those retail guys start buying. And then we'll throw 1,000 lot on and slam it down. And then we'll buy them all up when they stop out. Let's see, hold on, there's some. Okay, thank you. Let's go on to the next step. If there's questions about anything I'm saying, please ask that. Otherwise, that's a good point. Let's leave the other stuff out. Okay, so this is the point I was just making. Previous price levels are too easy to game. And I don't care what the price level is. You can name any of them, and I use them for the same reason, but I don't look at them as support and resistance. Fibs, pivots, moving averages, Hall moving averages, name whatever you want. And guess what? That includes linear regression channels. They're just a way of getting statistics back from the market. And if you look at those things as being buy or sell points, you're going to get slaughtered because they're not. What they are is they are inflection points. They are areas of interest. And so when we get down there, this should go back to your question, Maria. Let's say we have a quote unquote price level that is churning, you know, whoever's buying is getting sold to, and we're not going anywhere, but there's a lot of volume. That's a really good example of what an inflection point starts to look like. Now, you can't predict at that point who's going to win. So you just watch and you let it go and you see who does win. Yeah, the VWAP is another example of just a statistic. It's the volume weighted average price. And you hear all these people saying, oh, you can trade by, you know, reversion to the VWAP and all that. Nonsense. The VWAP is showing what has already happened. Yeah, a lot of days that are range days, we do revert to the VWAP. But trading based on the VWAP is really stupid. Trading based on the price action or the order flow that takes us back to the VWAP. Oh, hello. That's what you're trying to do. Okay. Any questions about this markets or auctions, about what I'm saying, about old technical analysis? Any specific questions about that? Okay, I don't see any. Cool. All right. So let's put this into a framework of actually making money trading. This is a half of a slide from the presentation about steps to being consistent, and I threw some new things on it. But just take a second and read this. You know, there's no secret out there. The people that are consistent, profitable traders do the following things. They develop a playbook for themselves, and that playbook consists of setups that work consistently, and they execute against that. By the way, that's the human part there, where you really got to work on your psychology and all that. And as is the feedback part, where you continue, well, you know, I have setups that have stopped working, and so I have to give feedback. Have they stopped working because I haven't traded them well, or they stopped working because the market conditions changed? So that allows me to go back and update the playbook, maybe take the setup out, or maybe put a new one in. I just put in a new gold one that we haven't even talked about yet, but I will try to share that at some point. So the whole purpose of this workshop is to get you used to this process. Understanding yourself and your personality, developing a playbook around that full of setups. I'm bringing you setups that anyone can use, and they can be used with different time frames and different strategies. So that's what we're trying to do here. The execution, that's up to you, and the feedback, I can teach you how to do that, but both of those are really individual. Okay, what makes a good setup? This is a really important slide, so if you're falling asleep, wake up. Yes, that's true, Summer. TA provides the context and order flow is used for confirmation. Absolutely, great way to put it. Okay, what makes a good setup? It's consistent. In other words, what I expected to do at some percentage of the time that's very high, it does. A good example of that is the ledge, which is an edge setup that I've talked about in the group a lot. You've heard me say the vast majority, I will say 99% of the time, a ledge will break to the direction of the ledge. However, that's not a trading strategy. That's just an event that you consistently see. Learning how to trade it is different. It has to repeat frequently enough to be useful. There's some really good setups that occur like once a year, you know, and more power to you if you're around when they happen. But I like setups that occur a couple times a day, and all the ones that we're talking about do, you know, open 5 every day. All the other ones, the flip is the only one that doesn't happen every day, but it happens a couple times a month at least, sometimes more. So risk and reward are clear. Now, I don't mean that there's a risk-reward ratio. I'm going to try to get you not to think that way. What I mean is that you can clearly think without a lot of math where a stop should go and where a target should be. So for example, with one of those ledge breakouts to the upside we had during the week, you know, you can say, all right, my stop should be right about here because there's some good support in the volume profile there. And I can expect it to probably pop up to about there based on the momentum. So I can throw a trade on and I already have a sense as to where my exits are. So I'm jumping down to that bullet point. Exits and potential targets are clear. An exit is the place where the trade no longer works. You have to know that before you enter the trade. And it has to be something, it doesn't have to be a mechanical price. Now, as a discretionary trader, I don't use a hard stop, but it's based on whether the setup is working or not. And in order to be able to do that discretion, in other words, do that without putting a hard stop in and say, okay, if this happens, I'm out, you really have to train yourself not to get hopeful or pray, or, I mean, if you're wrong, you must bail. And if you're right, it works. And as a discretionary trader, that is really your challenge to burn that in. Now, that doesn't mean you don't use stops. You can, and you should, but where they go and where you exit, if it, you know, there's a lot of times I'll have a stop 10 ticks away from the trade, and I'll jump out after 1 tick. So, no, don't like that, I'm gone. That's what I'm talking about, okay? And this middle bullet, this is a really controversial thing. So listen closely on this one too, and then we're just about done with the core content. You can do one of two things and be consistently successful. You can have a low win rate with very high reward. That is the kind of holy grail of prop trading, where you just do a few trades, excuse me, you do a lot of trades, you don't win very often, you don't lose very much, but every now and then, boom, you hit, and they're so big that they just, you know, home runs. Now, my experience is that's very unlikely reality. I don't see that very often. Most traders that I know and that I've seen are high win rate, low reward kind of traders, particularly in this high volatility. What I've strived to do is be both. And that's why I have these two setup modes. Setups I call scalping setups and setups I call weight setups. I'll elaborate on that in a minute. Yes, Amy, both is ideal, but psychologically, particularly for someone as new as you to trading, you have no idea how hard that is to do. You have to be able to transition your brain, and that's the art form there. Okay, so, and just a real quick example. What do I mean by that? That low win rate, high reward, high win, low reward, et cetera. I post a lot of results that are samples. I'll try to dig up some low win rate, high reward trades for you. But in the meantime, you see a lot of the others from me because that's my bread and butter. You know, as long as I can make more in the commission, I'll take a trade. And you know, my personality, I have a lot of energy that goes with me. But it's nice to find the other ones now and then, or, you know, even to put those on while you're scalping. I do that too. So anyway, let's see. Okay, the word trend. I don't want to be as hard-ass about support and resistance. That one is just forbidden. Trend isn't forbidden, but the problem with the word trend is simply the next question. What's the time frame? So these people that tell me they're trend traders, nonsense. You know, if you're trying to trade intraday trends, you know, the old technical world, or my buddy Barry Taylor with the better indicators, you know, he used to always say that there's two primary trends a day, and that's true. And his setup approach was to try to get one or two of those, you know, with 4 points. And that all was great stuff to kind of look at years ago, but it just isn't very frequent now. So be careful of using the term trend, but a scalp trade is not necessarily not a trend trade. It's more the mechanism of execution. When I say scalp or wait mode, they're modes. That's why I chose that when I built my process. So here's the 8 setups we're going to learn. The ones in green are scalp setups. The ones in blue are weight setups. And I apologize, this is a little fuzzy. I just clipped it off of I did a screenshot. I didn't realize when I blew it up it was going to look like that. So I'll do better in the future. But anyway, so the point is that a scalp, all right, let me back up. Here's one of my philosophies that I'll repeat, and I'll post this phrasing for you, but all trades are scalps until they prove otherwise. So that's the answer to your question. Everything should be treated like a scalp. If it starts to become a trend and you're in it, you're in good shape, particularly if you're good at managing your trades. So a lot of these setups, however, the reason I call them weight setups is because it takes time for them to develop. And if you come into them with that mentality of it's going to work instantly or I'm getting out, you're going to get chopped up in that trade. On the other hand, if I go into a high Momo trade, number one here, and I don't, you know, and it pops, I take profits instantly. I mean, I will do it with a market order, or I'll hit the ask or the bid with my mouse. But waiting for that type of trade to become a trend when it very likely could be is risky. So I won't take that risk. So that's why I divide my thinking into scalp mode and weight mode. Every trade is a scalp until it proves otherwise. So for example, if I put on a high volume reversal trade, that's one that I will give a little more time to develop. So the way I'll do that is I'll throw on my quote unquote scalp with a 1 lot or a 2 lot, and I'll see if it starts working. Maybe I'll take half of it off when it's profitable and there's still one and it's still working. So I'll say, all right, this is developing into a weight. So I'll say, okay, at what prices do I want to add to it? At what prices will I bail out? At what prices do I want to start taking profits? So it's a different mentality than just, oh, there's a good high Momo. I'm going to get in there and get out with a couple of points or ticks. Okay. Yes, I will post that too. Every trade is a scalp until it proves otherwise. That's one of my, you're going to hear a lot of Jeff-isms or Doc-isms. That's one of them. In fact, I just posted that. I'm trying to right now. Let's see. Oh, yeah, I'll post that here. I'm putting that in the Slack right now. The Slack is kind of our central store of information. So keep that in mind, you know, with questions and posting stuff and whatnot. Okay, so back to the 8 setups. Real quick, and then we're done here. Yeah, 36. Okay, I'm going to give you a one-sentence definition of each of these, just so you know what we're talking about. Some of you know them, some of you don't. I won't elaborate a lot. I'll take questions after this, and then we're pretty much going to wrap up. Okay. HMOMO is what it sounds. It's high MOMO. There's a very specific way you look for that, though. It's not just, oh, there's high MOMO, I'm going to trade. That is not what that means. Number two are edge trades. Edges are edges of the volume profile. A ledge is a specific kind of edge of the volume profile at the edge of a day in a group of days. More on that. For wait mode, are you drilling down the order flow or ignoring some exit signals? For wait mode, what I am doing is giving that particular setup time to develop. So we will talk about that on a setup by setup basis. Wait mode in a flip is different than wait mode is in an HV reversal. Okay. Number three, range. This is the hardest one, but it's also the most lucrative. The vast majority of days in the futures markets are range days, and they will work one end of the range and then they'll work the other. And 9 times out of 10, we end up back somewhere in the middle of the range. And particularly if you pay attention to high and low volume nodes, you'll see those kind of getting filled in as that process happens. There is a way to kind of define that range, and when we get to one end of it, fade it. We get to the other end of it, fade it. As we get back toward the middle, you take profits. That's a really lucrative strategy if you get good at executing. I have it as a scalp strategy, but sometimes it can develop into a waiting one as well. Okay, the open 5, I think everybody knows that one. That's just the opening 5 range and the plays around that, which go on all day, not just at the opening 5 minutes, but it defines a range for us. High volume reversals are exactly that. We see those all the time in every instrument. They're a really lucrative thing to trade with a lot of size if you're capable of the risk management to do it. And by that, I mean, you jump in when it starts to look like it's reversing under certain conditions. I can explain that more later. The LRCs are really useful in that setup. And then as the trade starts to go your way, you can add to it, and it can really, really get lucrative. Is my range cash session or overnight? I use 2. If you look at all my charts, they're consistent. Doesn't matter what instrument. I break every trading instrument into 2 sessions, the overnight and then the regular hours of the New York exchange, not the regular hours of that instrument. And that's just because that's when the volume's high. So, and the term cash session is wrong there. The 2 terms you're looking for are RTH, regular trading hours, and Globex, or the overnight, Maria. Okay, let's see. Spring and up thrust, these are the 2 primary Wyckoff setups I use. They are both wait setups, and sometimes you have to wait an hour while they develop. They're also, if you're a new trader and you just were going to learn one thing, I would learn springs and up thrusts, or I would learn the open 5. You can make a living with just one of those or the other. Weiss likes to say this, he says this in Trades About to Happen, that you can make a living just trading springs in stocks, futures, whatever you want. That could not be more true. It is the most consistent pattern over and over again. And if you've got good order flow and a good setup on your charts for springs and you pay attention, you can do really well. Okay, let's see. First hour high and low. That's the 60-minute opening range, also called the initial balance. Many, many people trade that. Learning how to do it is important. And then the flip. Really, really lucrative. Doesn't happen very often, but this is when there's an overnight move that's really big, typically on low volume, and then the regular session opens and it just totally reverses. We see that pretty frequently, a couple times a month. Again, it's one of those trades when it starts to happen, you can nibble. And then if it just totally rolls over like it often does, you're already in, and then you can add to your winner. Okay. The best time to trade, Amy, is the best time for you. And the key to that is finding your Bubba. I'm going to say this to you in front of everybody else because I've watched your posts and your comments, and this applies to many of the people in this group. But you guys are trying to trade live money and or combines, and you haven't found your Bubba yet. You know enough to be profitable sometimes, but you haven't found your fit, and you really need to do that. And hopefully I can help you do that. Okay, the last comments on this slide are very important. The best situations to trade are the asymmetric ones. Very easily or very simply, asymmetric just means that the reward is just many, many times greater than the risk. And those occur. You got to learn how to see them. Those typically occur when it's more than one of these at the same time. Like we'll get a ledge edge that's also a range breakout that happens on the open 5 with a high volume reversal, and that creates a spring. I mean, that happens. When you see that, it's just one of those go in with everything you got because the odds are really, really good you're going to make money. Yeah, HMOMO is an abbreviation for high momentum. Yes, thank you. Any of you that are not native English speakers or that don't understand Jeff's slang, please do not hesitate to ask stuff like that, because that is absolutely correct. And I often skip over explaining, and that I should explain those things better. Okay, ledges type edge. Okay, we covered all that. So I think this is, hold on, that was the end of this. Oh no, sorry, last bit on the structure, and then we'll go back and take any questions you guys have up. Okay, this thing's going to be totally flexible. I mean, I might just open up a chat like this in the middle of the day if something interesting is going on, and you can join or not. We are going to do one of the indicators a week, although we're only going to do that in the middle 8 weeks, not the first and last. This is the first, so this is more introductory. We're also going to do that FOMC announcement that is posted in the group. I'm going to have a session during that on Wednesday. Let's see, the schedules will typically go up midweek and everything will rotate. So, it won't be the same days and times. I will have impromptu meetings and office hours, which, be like, I'll open a session like this where you guys can ask questions and I'll answer them. Please look at the assignments channel and whatever's there, do or pay attention to. And this last one, again, just repeating this. Yes, I'll show you my settings. And yes, we'll talk a little bit about platforms. I'm not going to do platform recommendations or anything like that. That's very individual. If you want it to look like mine, use Ninja and Jigsaw. If you're on Sierra and you love it, great. I'm really trying to make this not about the toolbox and make it about what you're looking for in your tools. And I hope everyone gets that. Okay, I think there's my contact info again, which I believe is the last slide. So I will open it up for any other questions. If there are not any, after a few minutes, we will call it a day. Yes, this will be recorded. Yes, I will post the recording link. Please don't share it. My trading setup is Jigsaw and NinjaTrader. Yes, that is correct. I have several data feeds. I'll answer that question in more detail later, Summer, but I have a bunch of platforms running too. I still use Toss a little bit, but the short answer is Ninja 7 and Ninja 8 with Jigsaw, both day trader and the plugin, running on several rhythmic feeds and a CQG feed as well. Okay, if you have questions, please type them in the chat. I will answer them and I will hang around as long as there's questions. I will not answer questions about specific setups because that's going to happen when we talk about that setup. Let's see, scalp to trend is the hardest. Yeah, we'll talk, Remo. We will talk. Okay, what's happening tomorrow? Second part of the session, repeat the same one. I explained at the beginning, basically what I'm gonna do is go through the same material, but we might have different questions. I may add a little bit to it. You're welcome to attend both or not. Do I find most traders have the same playbook? Absolutely not. Kavika, I don't know any two traders that have the same playbook, and they shouldn't. Sometimes traders and prop firms will work on teams, if they have a certain group of instruments they trade, but generally that's a pretty individual thing. There will be all different days and times, guys. I'll repeat that one again. We will do mornings, we'll do nights, we'll do midnights. There will be every day and time. And if you're not available on those, then you'll watch the recording. That way everybody gets some live sessions. How did I learn when not to trade, and what's my least favorable trading environment? Well, that's an easy one. I have some physical pain issues when I don't feel well. And I've learned, though, to kind of migrate that into a second thing, which is when when my head isn't really, in the game. And I've learned to kind of give myself a checkpoint for that. It's something that's in my process, and I will talk about it more at another time. Is there any you could look at the two there up in the European session? That would be something to email me, David, about the European session. I don't want to go into that here. No, a playbook is not a plan. And by the way, I don't believe in trading plans either. I think that's kind of a relic of the old technical analysis world. I have used footprints in the past to learn order flow. I don't use them now because I find by the time I see something on a footprint, it's already happened. And there are many footprints built into jigsaw domes. So that's the answer to that question, Fernando. Back to, I hope it's Bar. I hope that's right. A playbook is not a plan. No, a playbook is a collection of setups. And based on the conditions in the market, that determines which setup in my playbook might be appropriate or none of the above. So that's the answer to your question about when do I not trade, Darren. If I'm feeling well and everything else is going well, but the setups just aren't producing anything or I'm not seeing them, then I know that's a bad environment. Okay, let's see. I missed the first part. No, I'm not going to talk about that in this session. I may talk about that in little impromptu ones, Amy. Let's put this down. Okay, is there any way? A few different futures. Yeah, I will do that. One of the things you should do, though, Kevin, there's a video posted in the Slack and I don't agree with everything he says about this, but there's a John Grady video posted there about choosing a market. And I don't agree with him on the NQ, but it's a good overview. So one of the things to do before you ask too many questions, this applies to everybody, is make sure you've read all the material in the workshop Slack. A lot of these questions are posted, answers in there. If you're going to use Ninja, I would recommend it. Yes, Steve, although I use Ninja 7, which doesn't include Orderflow. For me, stability is more important than features because I watch the tape. I don't need a lot of fancy features, but I am migrating to Ninja 8 right now because Windows 7 and Ninja 7 are going away. How long did it take to develop the discipline to only take your playbook trades? That's a great question, Blair. I've been trading 46 years and the answer is 48 years. In other words, I don't have discipline for that all the time. Sometimes I take trades on a whim and I shouldn't. Anybody that tells you they don't isn't being honest. The trick is recognizing if you made a mistake or not, or sometimes you just get lucky. And, so do I trade specific instruments? Yeah, mostly ES, CL, NQ, and GC, although I'm opportunistic about that. There's homework posted in the group. And there will always be, and I will post more. I'm just getting that started. First, I had to get everyone there. I'm gonna say the next thing one more time because I really would like to. I don't want this to be misconstrued, but you guys are asking a lot of the same questions over and over again, and I went to a lot of time and energy to put the answers in the Slack. So if you haven't been to the Slack yet, then perhaps you should do that before asking questions. Yes, I recommend new traders 1 or 2 instruments. It's very hard to do just one instrument, and the reason is there are very few instruments that work well all the time, so having at least one alternative isn't a bad idea. But trying to learn a bunch of instruments at once is really hard. Any other questions? Okay, it looks like it's pretty quiet there, so we don't end up with a huge file here. I'm going to go ahead and wrap it up. Post further questions in the Slack. I will see correlated on non-correlated instruments. Blair, go look at the material in the Slack, please. All right, thanks everybody. I'll see you later.